Welcome to episode 125 of Convos on the Pedicab. I'm here with my friend Brandon Keys. He's better known as Green Candle Investments on Twitter and Instagram. Before we get started, we got to give a shout out to our sponsors. This episode is brought to you by Balcones Roofs Austin. Have you been leaving your house outside again? Well, Texas weather can wreak havoc on your home, especially your roof. And if you haven't had it inspected lately, chances are that outside elements could be making their way inside. So trust Balcones Roofing and Remodeling to perform a thorough roof inspection and offer long-lasting solutions. They are the only 5-star rated roofer in Austin who specialize in installing the impact-resistant F-Wave Revia and back all roof replacements with a $20,000 guarantee. To schedule a roof inspection, call 512-937-8805 or visit balconesroofsaustin.com. 512 Boutique Events services all catering and staffing needs to any event in Austin and the surrounding areas. Anything from weddings to corporate events to festivals, they are even equipped to provide bar services. Visit their website today at www.512boutiqueevents.com for contact information. Calendar fills up quickly, so be sure to get your event booked today. All right, Brandon, thank you for coming on.
Yeah, man, thanks for having me.
Yeah.
That's
funny because I messaged you on Twitter asking you know.
Yeah, you asked me to, yeah, this is how the whole thing started. You asked me to sponsor, and I'm like, bro, I'm looking for those too. So.
Yeah. That could be you on that read aloud, bro. Come on.
I know. I got to get better with that stuff. So, I mean, good for you, though. You got what, like 2 or 3 of them? So,
I got two. So now, the costs are kind of covered, but we'll see if they renew or how everything's going. It's a trial thing.
Yeah, you got you got the local awesome stuff too. So I mean,
which is great. That's how it starts. You start small and you build.
Exactly. Yeah.
Anyway, I am glad that you're coming on.
Yeah, I appreciate you having me.
You run an account called Green Candle Investments.
Yep. Yeah. So I got Green Candle Investments. Biggest is on Twitter. We were kind of talking about that a little bit pre-show, but I have that. Then State of Bitcoin podcast, Macro Insights podcast, read a newsletter, do a lot of Twitter Spaces, interactive stuff. So yeah, man, I just trying to put out the content.
And there really is no better time than now to have you on, considering everything that's happening.
Yeah, I mean, shit's hitting the fan, to say the very least.
So, what is going on for those of us who wear a mask alone to drive our car?
Well, essentially, like the banking system, like the regional banking system is kind of imploding on itself. So Silicon Valley Bank is like the biggest one that's making all the headlines. It's a regional bank in Silicon Valley. They have a branch in like Northern California and in Massachusetts. Essentially, they're funding a lot of these startup companies. So startup companies have their money in this bank. They got loans from this bank. They're kind of like running their entire enterprise through this bank. And, what happened is they put it in a lot of risky investments, but then they've kind of, started to say that they were putting it in more safer investments like bonds and other things like that. And then, as the, Fed has kind of been raising interest rates, it's kind of been screwing some of these smaller, regional banks that have been, putting money in a little bit more risky things.
Well, okay. I actually thought that they weren't investing in like risk assets like back in 2008. Like I thought that what happened was they were just buying bonds, and they bought all the bonds, like a year ago, when interest rates were 0 and the yield was like 1% or something like that. And then once interest rates start going up, then all of a sudden now the value of the bonds was it bonds or T-bills?
I believe it was both, I think.
Okay.
I want to say. Yeah, but I mean, you're right on that.
So the value goes down, and then the startup companies that they were lending money to were insolvent. Like they didn't do a very good job. They were lending money indiscriminately because it was a red hot economy, and they figured they were just going to get the money back anyway. And a lot of the companies that they lend the money to didn't have the ability to pay the money back, and they're underwater on their bonds. And then you get something on Twitter where the CEO is trying to raise capital, and when you're a bank trying to raise capital, if I'm somebody who has my money in that bank, I'm going to be concerned and want my money out of the bank. And then, and if I'm wrong, correct me on this because I'm just a guy on a bicycle, right?
No. I mean, you're actually like nailing it on the head.
Okay.
What I meant by like the risk of the assets were just essentially like, they were lending to a bunch of these startups, right? I mean, in Silicon Valley had a bunch of
They
various
didn't
tech
they
startups.
did not do their due diligence about who they were lending their money to.
Exactly. Yeah. But you're nailing it on the head, right? So, as the Fed is kind of increasing those interest rates and other things like that, those bonds and everything that they got on very low interest rates, essentially there was, like you said, they were losing a bunch of money on that. And then, yeah, as you described, somebody, their like CEO, was it, or somebody, the CFO, somebody big up in Silicon Valley Bank essentially just pull out a bat signal saying that they're trying to raise money, and then there was a bank run. Everybody went to the bank accounts and tried to withdraw their money, and then yeah.
And fun fact about fractional reserve banking is that it's called fractional reserve banking because the bank only actually has a fraction of your deposits in their vaults.
Well, what's actually interesting about that, so in 2020 they changed it. I believe that you only had to have like, I think 10%.
10%.
And then, once 2020 came, they lowered that even more, where you essentially don't even have to have, I believe, any of the actual bank in the vault, so to speak, or any of the the percentage of the bank accounts in there. So
I'm trying to find something from Lynn Alden actually that I saw.
Okay. Yeah, I mean, she's great.
She's
I mean,
the best.
she can explain it a lot better than I can.
Okay. Now, why is it?
Oh, you can't click the tweet, but
years ago, the narrow bank tried to do a business model of just taking deposits and holding 100% of them in reserves at the Fed. It would basically be the safest possible bank if allowed to exist. But they had not been granted a Fed account. They even went to court over it. Okay, well, I wish I could fucking find this. Okay, Lynn Alden, narrow bank. I'm gonna look this up.
All right.
Because I want to actually read this out loud. Because that's how wild this thing is.
What was it? Narrow bank.
Yeah.
See if I can find it on Twitter.
I'm looking at it right now.
Here we go. Is it this? Is
Yes. Let's read this out loud.
Yeah. So here we go.
Okay. Let's start this over again. Okay.
Mm-hmm.
Years ago, the narrow bank tried to do a business model of just taking deposits and holding 100% of them in reserves at the Fed. It would basically be the safest possible bank if allowed to exist, but they had not been granted a Fed account. They even went to court over it. If one bank is quote-unquote too safe, it can suck deposits out of the whole system towards that bank. Most of the current two-tier banking system wouldn't make sense if that full reserve bank exists. So regulators want banks to be safe, but for none to be too safe. Cool.
Yeah,
okay.
Exactly.
Banks got a ton of new deposits in 2020, 2021 from the stimulus that went out, and they had to invest them somewhere. Mostly they went to assets with little to no credit risk, but that had duration, e.g. treasuries and mortgages. And then the Fed sucked liquidity out. Wow. Okay, that's pretty much it.
Yeah.
All right. And then she goes and talks about Custodia Bank and this lady, Caitlin Long. She runs a company called Custodia Bank, and they were going to hold 108% of their deposits at the Fed, and the Fed says, no, we're not doing that.
Yeah, and Caitlin Long and Custodia Bank's pretty well known in the Bitcoin space because Caitlin Long's a big, Bitcoiner, so to speak. So she wants to do, yeah, exactly like you said, hold 108% of their deposits to make it, a safer bank, but they can't get any licensing or anything like that from the Fed.
Yeah, and then people are going off and blaming Trump's deregulation policies on the bank. When meanwhile, you have people that are literally applying to have banks that hold assets at 1-to-1, if not higher, and they're getting denied applications by regulators, and they're being penalized and made an example of in order to stop these things from happening.
Yeah, exactly. I mean, it's just like it's clown world to a T. It doesn't make any sense. And yeah, I mean, essentially we're having a bunch of regional banks kind of crack because of this. So Silicon Valley is the biggest name, and then there's others that are kind of fall to the cog. But, I don't know. It's kind of maybe a tinfoil hat theory, but there's the 4 big banks in the entire United States, which essentially after these regional banks kind of crack and fall, these bigger guys can come in and kind of swoop to the rescue. And that's where I think that this is kind of going, where we're going to become more, I guess, centralized in that aspect, where instead of having regional banks like in each state, like when I was in college, I went to school in Tennessee. There was like Tennessee Regional Bank and all that were, there's obviously Silicon Valley Regional Bank and all that kind of stuff. Like once those crack because they're lending to local startups or mortgages or other places like that, then we're just going to have like essentially just 4 big players that can come in and kind of control the entire industry. And, when we have 4 big guys and they're kind of communicating, it's essentially how you get like a monopoly of banking, and it's just terrible for the end consumer.
Well, this is also how you can implement central bank digital currencies.
Yeah, 100%.
Because when I'm going to go even deeper on this tinfoil hat stuff.
Yeah.
Right. But do you ever listen to any like the World Economic Forum meetings?
So I haven't I mean, I get the sound bites from Twitter.
I get the sound bites, but
yeah.
sometimes like I have an hour drive here, so I'll just listen to these lizards speak. Right?
Yeah.
And lizards it's a euphemism. Okay.
Yeah.
Just to be clear, but I'm listening to these people speak, and like a big term that they use is public-private partnerships, right? And the bankers that go to World Economic Forum meetings, because they do have people from the public and private sector going to these meetings. You have people from tech, you have people from finance, you have people in energy, both alternative and in traditional. You have people in academia. You have people from a lot of different sectors going to these meetings to kind of lay the vision for how they want the future of the world to be in order to solve a plethora of problems. And that's what they're in order to solve a plethora of problems and make the world a better and more sustainable place. Like that's what they say on paper.
Yeah.
Right. But the regional banks are not going to Davos.
No.
Right. Like Custodia is not being invited to Davos.
No.
The bank that wants to hold its deposit 1-to-1 is not being invited to Davos. And the companies that are going there, the big four banks are teaming up and getting even closer with governments, bureaucrats, and NGOs. And the only reason that they would be doing that these banks would be doing that is because it would ultimately give the bigger banks more power. Like that's the only logical conclusion. And so, if you're going to implement something like a CBDC, you have to use the big banks, because if you try to do it independently of the big banks have a lot of resources to fight you on this.
Yeah. Exactly, but
if you're working with the big banks, and the big banks, they're stakeholders along with the government, or the government's a stakeholder with the big banks, and vice versa, right? They're stakeholders for one another, and because of that, the governments, the Fed, and the mega banks can kind of collaborate and offer a new mode of payment that they feel will help everybody else. But what it's really doing is it's just giving a really small group of people a lot more power over how money works. And listen, all these people want to have full control over everything, but they also realize that you can't, and you still have to team up in some capacity. So these people are still going to just team up with each other and try to monopolize the financial system.
Oh, 100%. Yeah, I mean, it is kind of an interesting dynamic because, I speak to various people, like some, Bitcoiners, some like in traditional finance and other things like that. So there's kind of like a mixed bag when it comes to how the Fed is raising interest rates. So obviously, they've been raising interest rates at a historically fast pace, 75 basis points, essentially every meeting except for the previous one where it was 25. But, it causes some layover effects like we've seen in the banking system. But what it also does is, the United States, their biggest export is the United States dollar. And so what that does, when you limit that dollar exporting and it makes it harder to obtain dollars, it makes the dollar, a little bit more valuable compared to other fiat currencies.
Yes.
So the theory that I kind of like and ascribe to is that, Jerome Powell is not necessarily a globalist. So he's trying to make the United States powerful compared to everything else, trying to really dive into the power of the dollar. But, I mean, it is interesting because Jerome Powell's also come out and said that there's room for more than one global reserve currency. He's never kind of gone against Bitcoin. He says he actually likes Bitcoin, but he's also said that...
Well, so does people also hate Gary Gensler, and Gary Gensler has repeatedly said that Bitcoin is not a security and it is an alternative form of money.
Yeah.
But the other crypto bros hate Gary Gensler.
Of course, yeah. I mean, there's a reason for them to hate him because he says that everything else is a security.
Which it kind of is.
I mean, it is.
It is a security.
100%. Oh, Bitcoin or
no,
everything else?
No, everything else is a security. Like
100%.
If you have a CEO and you have a board of directors,
a marketing
they might
department.
They might be fun to invest in, and there could be some potential, some use case for some different coins in the future, right? But it's not. It's never going to be an alternative way to use money, whereas Bitcoin is actually scientifically better money.
Yeah, exactly. I mean, it's hard money, right? Hard coded in 21 million and decentralized. I think that's the biggest aspect that people kind of undermine about Bitcoin is that there's nobody that can control it, like we're seeing now, right? I mean, people can control everything else, and people by general are like are essentially power hungry, right?
Yeah.
So they're going to do all they can to keep control, and once they're in power, they want to stay in power. I mean, we see it in politicians right now. Like, they're going to do whatever they can or whatever they want for the first couple years, and then when it comes to election time, they're just going to tell you whatever you want to hear.
I actually think that is true. What do you think about this guy Vivek Ramaswamy?
He's
the Indian dude that's been actually he went on this podcast with David Sachs, who was like the former CEO of PayPal.
Okay.
With Megyn Kelly, and he's just been very vocal on Twitter about not wanting to bail out these Silicon Valley banks, like not wanting to bail out the startups or the VCs or any of the people that invested. Like if they went over their deposit limits, they should just be left to deal with the consequences.
Yeah, I mean, obviously there's a lot of negative effects that can happen.
Yeah, I just want to know what your thoughts on that are.
I mean, like, it's interesting because it's like a double-edged sword, right? To bail out all these banks and companies and all like that. Where is that money going to come from? It's going to either come from the tax dollars or the government's going to print more money to kind of bail out these companies. And at the end of the day, that's going to cause higher inflation and. Yeah, I mean, that's
it's
exactly what we're trying to fight.
Banks are also going to start requiring you to keep more money in their accounts.
Yeah.
They're going to also, like, because I know that with like, I barely keep any money in, like, the actual bank, right? Like,
yeah.
I just don't trust it, right?
Yeah, well, I mean,
but, like, and they're going to just start saying, well, now you have to have $3,000. Like, now you have to have, like, instead of, like, a $30 limit with JP Morgan, right?
Yeah.
Because they send you messages when you're under a certain limit.
Yeah.
Now it's going to say, well, you have to have at least $1,000 in your account at all times, in order for like safety and whatnot, right?
Yeah.
So
I mean, well, some banks are even starting to do that. Like, Chase does that. I know that they have and especially like business accounts, business banking.
I think I have to have like $1,000.
Yeah, you have to have
or
a
you're paying
certain
some
amount.
kind of like $20 a month fee, or
Yeah, and I mean, like there's been scenarios with like Wells Fargo, Chase, and some of these others. I mean, like if you go down and like look at Wells Fargo's like fraud in some of their cases, they've had there was a full documentary I think on Netflix about like people who died and then owed like thousands of dollars to Wells Fargo because nobody went in and closed their account, and then they just didn't have enough money in there, and then they just kept charging them the $15 a month fee until finally somebody was like, hey, like I'm here to close out and take out everything out of my dead grandmother's account, and now they owe like thousands of dollars. And Wells Fargo's like, well, yeah, sorry, they didn't close their account. I'm like, they're dead. Like what? Like, so I mean, like the overall banking system, like Wells Fargo, Chase, like all these guys, if you go and like Google all these names, they've had like fraud and other things like that happen to them like multiple times. But they're like we said earlier, they just are kind of in bed with the regulators. So like they get like a slap on the wrist, maybe they pay a little fine, and then they go upon their day, and they keep running all this essentially like a Ponzi scheme.
Yeah, and then they demonize Bitcoin. It's same script.
I mean, and it's interesting too because back to what I was saying about Jerome Powell is that he's like kind of said Bitcoin's fine or whatever, but he's also said that if the United States creates a CBDC, it'll kill Bitcoin. So, I mean, it's like...
I mean, just because you're saying that doesn't mean that it's true.
Yeah.
Look, a U.S. CBDC
100%.
has no way of killing... Like, how to kill Bitcoin?
Yeah.
I mean, it would change the value because if you make a CBDC, dollars are going to be calculated differently.
Yeah, I mean, it's just like the whole CBDC argument is interesting because, like, I mean, if... What 2020 has showed us is that essentially if like the government or some people in charge tell you to do something, a big percentage of the population globally will do it. Or, in some places like China or like that, they'll force you to do it. So like they're trying to implement a CBDC right now in China. I don't know if you know anything about
digital yuan, yeah.
Yeah.
I thought that's already been implemented.
Yeah, so it's been implemented, but like
you scan your face and all of a sudden you can get like a cookie from the jar or something like that.
Yeah, it's like a digital credit, or it's a digital like social score.
Yeah, but they had the social credit system in like 2018 in China.
Yeah, exactly. So I mean, I wouldn't be surprised if that shit like kind of starts to I don't know if it'll like fully happen here in the United States, but I wouldn't be surprised if somebody at least tries
Well,
it.
okay, but it's already happening with like Operation Choke Point.
What is that?
It was an Obama era banking policy that basically penalized banks for lending, like for doing undesirable lending practices. So first they went after the payday lenders. Nobody said anything because payday lenders are horrible.
Yeah.
Right? But then they're going after gun manufacturers.
Yeah.
Then they go after oil companies. Then they might go after you because you're hiring somebody who's unvaccinated at your company. Then they might go after you because, you don't have a transgender person on your board of directors. So it becomes one of those things where the more you implement these types of procedures, well, the only people that can afford to comply with these requirements are going to be big mega banks and big mega corporations. And also, when it comes to regional banks and whatever it is, the more you do this DEI stuff, you're just gonna by default hire people that are less qualified to do the job because you're focused on the wrong set of issues.
Yeah.
And then if you see more and more of these failures, well then, the big banks are going to have to consolidate because there's no other choice. Or now we have no other choice. Now the only other alternative to deal with, hyperinflation, to deal with the fact that people are starving, to deal with the fact that there's so much inequity going on. Well, now we need a retail CBDC to give people a universal income so that they can basically survive and pay their bills. And enough people have such low sets of self-worth, and enough people have made such bad financial decisions, and enough people, through no fault of their own, like it's all in the education system, right? And enough people have mountains of student debt, or they don't have any health care or something, that they are just going to not only they're going to be forced into getting a CBDC, but they're going to embrace it. They're going to love the UBI. They're going to love it.
Yeah, 100%. I mean, like we're getting to a point here in the United States where people want to work a 4-day work week. They want to work less and get paid more.
Well, I work a 4-day work week on this bike.
Yeah, I know, but I mean, you're your own boss, and you have the ability to do that, though, right? I mean, that's the benefit, but you also have the risk. You know what I'm saying? Like you have to put up and make a certain amount of money in order to get by and live, and you could work a 5th day if you want to make more. I
could if I wanted to.
Yeah, but like when it comes to like actual companies and actually getting shit done, it's just like like I was having this talk in Pleb Lab the other day. It's like everybody wants McDonald's to keep their burgers cheap, right? But then they want to give everybody $15 minimum wage. Well, how much of the spread do you think there is on a fucking McDouble that's $1? I mean, there's not like much of a margin there, and everybody's got their overhead costs and everything like that.
Brandon,
so
you're missing out on the fact that the reason the burgers are cheap is not because they're paying their employees less. It's because they're literally getting Bill Gates, Monsanto, Tyson Chicken, Mystery Meat.
I mean, yeah, they're doing that. They're ordering in bulk, which chain restaurants can do. But like, all right, so like Mighty Fine Burgers is a huge burger place here in town, right?
Yeah.
I mean, they probably pay their employees a little bit better than McDonald's, maybe $9, $10.
But to be fair, why are you even eating that crap anyway? You shouldn't even be eating McDonald's. You should go to KNC Cattle or the Beef Initiative, get some real meat.
I know, exactly. Yeah. But I mean, it's like I said, it's a double-edged sword. Like people want to work less, get paid more, and then they want their food to be cheap. I mean, they're complaining about like.
Here's the thing: people are always going to cut costs at any avenue, and it's always going to be to the workers. And the more you try to raise wages and stuff, you'll just automate people out of having a job in general.
Yeah, I was trying to while you were talking about that CBDC, I was trying to look up how much Silicon Valley Bank spent on DEI stuff like diversity.
Yeah, I think that has been. I've been hearing stuff. I don't know that.
I was trying to find it.
Go look through that. That's actually very interesting.
Because they paid through a bunch of money, like millions of dollars, into that recently. And then the other kind of sketchy part about all of it is that their head higher up sold like, I think it was like 45 million or maybe 4.5 million, I don't know, like millions of dollars worth of stock within the last 3 days, right before the bank collapsed too.
So that's pretty scary, but also that's not really a good measure to look at for a company's valuation.
Yeah, that's what people were saying too. I mean, it wasn't like necessarily I don't know, all these.
Every year, the CEOs are forced to sell large amounts of stock. Like that's part of a company thing where they have to sell that. Like I remember like a couple years ago, I saw like Tim Cook sold an insane amount of Apple stock, and I had a family account like that had like a Morgan Stanley account, and I called the person there and I was like, hey man, is this concerning? Why did this guy sell that? And he's like, that's a yearly filing, dude. That's what they have to do.
Yeah, they have to in certain aspects, but I mean, it was just kind of coincidental timing, which is kind of sketchy, at this point. But
well, the other thing too, like what we were talking about is like, you got to like really, in order to see the health of a company, you got to like see, what was their cash flow statement? How much cash do they have on hand? What do their balance sheet looks like? What was their assets to liability ratio? You know what I mean? Like like there's all of these things, right? And nobody has the time to look at that shit.
Yeah.
Nobody has the time. Like, in order to really be on top of your investments, you got to spend like an hour, like a day, looking at like for every company you're looking. You got to like actually like spend 1 hour per day or something on each company's finance. Yeah, just to understand what's going on. Or an hour a week. You have to spend like. or an hour a quarter per company to see what's happening.
Yeah, I mean, we're like kind of in this spot, which it's really tough, right? Because like the average person is not making enough money to either save, or if they are, they need to make their dollar go a little bit farther, right? I mean, you get a 3% raise every single year at some major corporation or whatever, and inflation's at 6%. The CPI came out on Tuesday. It's 6%. Obviously, we know that the CPI is a basket of goods that is kind of manipulated. So the CPI of 6% is probably undershooting it. I mean, it's definitely undershooting it for the everyday, cost of things. But in order to make your savings and everything else go far, you can't put it in a bank account where you're getting 0.5 or even like 2%, back on your yield. So you're trying to invest it. And so that's kind of what we saw in like the GameStop debacle, was like all these people are just kind of FOMOing into all these stocks, and they're trying to become their own like personal hedge fund managers, trying to do exactly what you're saying, spending a lot of time researching companies, trying to figure all this stuff out doing other things like side hustle. Like we had the huge like side hustle culture kind of go in where, people work their 9 to 5, then come home, drive Uber.
Everyone's a fucking Uber driver, dude. I was going to say that. Like I see all these Ubers like clog up our streets, and I look at it, I'm like, bro, like you think you're being entrepreneurial, you think you're hustling, but you're really just like you're what you're doing right now is the equivalency of getting a participation trophy in life.
100%. And what comes with that is like it's burnout, significant burnout. It's like like I said, you work the 9 to 5, then you work 5:30 to 9:30 driving Uber or whatever it is, or delivering groceries, and then now we're seeing people kind of vouch for like I said, the 4-day work week, because they're like sick and tired of having to work their ass off because of all this inflation and all these expenses just kind of skyrocketing, and so they want to work less because they're like, all right, well, I've kept this job for through COVID or whatever it was, and now my expenses are getting more. I want to have more time to myself instead of just grinding and slaving away.
If you kept your job through COVID and didn't have to worry about anything when things were locked down, you had the opportunity of a lifetime to buy stocks and even other cryptocurrencies. And if you didn't do that with that opportunity, and I knew this, right? And I was like, and there was stuff I couldn't, and I felt like I was choked off. I wound up getting some things and wound up being okay, right? But for a while, I like knew it was happening, and there was like a month or so I couldn't take advantage of it, and these other people could, and you didn't. Yeah. Bro, you deserve what you get, bro. Fuck you. You literally deserve to be where you are, man. You had your opportunity, but you listened to the pundits on CNN and chose to chose to comply with the garbage.
Yeah, no, that's fair. But I mean, at the same time though, too, like stocks have kind of come down, and they're not maybe at the COVID lows, but they're pretty close. I mean, like
I'm not buying stocks right now.
Yeah, I'm just kind of DCAing into Bitcoin
that's
this
it.
time, yeah.
Maybe like Amazon or something. You know what though? Maybe if you were buying stocks, maybe buying those big banks. Just if you were just a selfish sociopath, maybe buying like big banking stocks could actually be a play.
Or maybe shorting banks. I
don't know. The big banks, they're going to swallow up the regional banks.
I had a tweet that kind of went.
Does that make sense?
No, it does. I had a tweet that went like I don't know, it went semi-viral, where it's all these regional banking stocks that it's showing their percentages in one day. So people say that Bitcoin's too volatile. Like, listen to this. Western Alliance Bank's down 75.9%. First Republic Bank down 66.8%. Silicon Valley Bank down 62.76%. And that's in one day.
In one day?
One day. Like three banks down over 60%.
They're going to they're not going to get bailed out by the government, right?
Oh, yeah.
But you know who they will get bailed out by?
The big banks.
That's what mergers and acquisitions. They're going to get bailed out in the form of a merger or an acquisition.
Yeah, so I mean, you could be a lunatic and go in and see like, hey, buy the dip of these small banks too, because once they get acquired, that stock will probably shoot up too.
I wonder if is there a small bank?
I don't know, not financial advice.
No, not financial advice. Not financial advice. I ride a tricycle for a living. Listen. Okay. No, but what was I gonna say? Is there an ETF for like small banks, like a small regional bank ETF?
That I don't know. I wouldn't be surprised if there is, but
that would be really interesting. Like that might actually be like if you're a total lunatic, that might actually be one of the ultimate D-gen plays right now.
That would be psychotic, honestly. I couldn't even imagine like seeing it. Oh yeah, it's down 75%. Like it's definitely going to come back up. Like believe it or not, companies and banks can fail. So I don't know. For me personally, I'd rather just buy Bitcoin at this point.
I mean, it's the safest investment, but I'm just wondering, like, because listen, all it takes is for like JP Morgan to acquire one or two of these banks, and your ETF on this regional banks You can make like a 5 or 10% gain.
Yeah,
But
probably.
at the same time, though, dude, if you just had Bitcoin, you're making way more than a 10% gain over a time
Oh,
frame.
yeah,
Just
100%.
because of the value proposition and everything that you're seeing. So it's just one of those things where it's like maybe you might make that 10% gain faster with whatever stock or ETF, but like in 3 to 5 years, if these things continue happening,
Yeah.
um,
Well, I mean, I don't know if it's going to
You know,
continue
like-
happening for 3 to 5 years. Well, the way I kind of see
and
it
well, I'm talking
playing
about
out-
the aftermath, though, right? Like
Yeah.
in 3 to 5 years,
That's fair.
in 3 to 5 years after everything is continuing to occur, after like inflation starts stabilizing, and it will stabilize because inflation's year over year.
Yeah.
And inflation isn't that much more expensive from this year to last year. It's just super expensive from this year to 2020.
Yeah.
So once that like stabilizes and once they pause the rate hikes,
Yeah.
you'll start seeing these other assets go fucking. My not financial advice, hypothesis.
No, and I think that's true. So obviously not financial advice again. So do not listen to me.
Do
all
not
right?
listen to me,
Do
no.
not listen to me.
Just like do that lady from the Financial Times, she was smart. I was like, do you think people should trust you for financial advice? Like, no.
Yeah,
no.
Exactly.
This episode is brought to you by Balcones Roofing and Remodeling. Have you been leaving your house outside again? Texas weather can wreak havoc on your home, especially your roof. And if you haven't had it inspected lately, chances are that outside elements could be making their way inside. Trust Balcones Roofing and Remodeling to perform a thorough roof inspection and offer long-lasting solutions. They are the only 5-star rated roofer in Austin who specialize in installing the impact-resistant F-Wave Revia and back all roof replacements with a $20,000 guarantee. To schedule a roof inspection, call 512-937-8805 or visit balconesroofsaustin.com. This episode is brought to you by 512 Boutique Events. 512 Boutique Events services all catering and staffing needs to any event in Austin and the surrounding areas. Anything from weddings to corporate events to festivals. They are even equipped to provide bar services. Visit their website today at www.512boutiqueevents.com for contact information. Calendar fills up quickly, so be sure to get your event booked today.
But I mean, I do think that, the Fed's going to have to really look in the mirror now and kind of consider whether or not they do the pivot earlier than they've kind of been saying. But, I've been under the theory prior to all this kind of shit hitting the fan that the Fed's going to continue to raise rates throughout the rest of the year, whether that's 25 basis point hikes every time or like 3 or 4 times and then they skip every other meeting, or they do 25 basis points, they let it ride out for a couple meetings and then they do a couple 25 more throughout the rest of the year. I think that they're going to do that and kind of continue that. But exactly like you said, the market's been screaming for a pivot or a pause on the rate hikes. And once that happens, the market's going to fucking take off. And I think that coincidentally, that's going to start to happen right around 2024. And that's what, potential politicians are going to point to, saying that, hey, look, you got to keep me in office because the stock market's starting to shoot up now in 2024. Whereas, they had to weather the storm. They're going to blame it on 45 and do all that kind of stuff. I mean, we're already kind of seeing they're starting to blame this bank collapse on 45 for some reason.
And listen, man, maybe deregulating some of these big banks could have had some consequences, right?
Yeah.
But printing $2 trillion in a red-hot inflation environment, and then having to do the fastest rate hike in history also led to that as well.
Yeah.
And then denying banks the FDIC license to operate when they are promising to hold reserves at a 1-to-1 level and showing you proof, or even 108%, or even at 108% with Caitlin Long. You can't blame Trump. Like, that's you. You did that. You chose to choke like an extremely responsible depositor off.
Oh, 100%.
While whining and dining and hanging out with Sam Bankman-Fried, knowing that what he was doing, that there was that there was a bunch of fuckery going on when you're having dinner with this guy. How do you not know that? How do you not know that it's a total clown show just by eating dinner or getting drinks with them?
Yeah, I mean, the system's rigged. If you haven't been able to figure that out now, I mean, the system is set up for people who are in power and to help out people that they know to get them in power. And it's just going to kind of keep continuing that way. And yeah, Sam Bankman-Fried's a prime example of that. What the hell is he's offering 10, 15, 20% yield on fucking nothing and just borrowing against his FTT token and just, playing.
But then
with
what
the
about
house
the
of cards.
VCs who gave him money? What about the venture capitalists that gave
I
him
think
money?
they're part of the problem too. Honestly, I think that they didn't understand what they were investing
How
in.
do you
They
not?
just
But you're a venture capitalist with tens of millions of dollars, with billions of dollars, and you don't understand what you're investing in.
Well, I mean, you see a company shoot up like FTX, and like the interesting part about FTX is like I think like only 10% of their clients were in the United States, so it's mostly like an offshore thing. Started in the Bahamas, did all that kind of stuff. But I mean, that should be a big red flag in itself. Is like the U.S. did like a fairly good job protecting like U.S. investors, but like everywhere else is kind of like a crapshoot.
Yeah, are the U.S. investors even going to be whole?
No, I mean they're
No.
not going to be. I mean the other problem is like it's the FTX is like and Alameda and all that stuff. It's like a contagion, right? So I mean they had so much money they became like one of the bigger fish because they were like just running rampant offshore that they started to help fund some of these United States-based corporations like BlockFi and some of these other ones. So like BlockFi will probably never be whole or anything like that. I actually had a BlockFi credit card, so like I guess I can't be saying that I was like not privy to any of this stuff. But
How much Bitcoin did you get back from it?
I mean, it was like 1.5%. So and then it would go into like an interest-bearing account, which was like
Do you have access to that still?
I pulled it all out. I mean, I lost maybe like $50 worth of Bitcoin or something.
Alright.
But like what I would do is like every single month I get paid out and then I just put it into
To
a
cold
different
storage?
yeah.
Alright.
So I mean, but like for example, like my parents, I would ask me to help buy them Bitcoin. I left it on an exchange and theirs got stuck in there because I was like. I think like older people in the older generation, like the cold storage aspect of Bitcoin is very intimidating, and the first aspect of it. So my parents were like seeing me, make all this like fiat basically on Bitcoin, and they're like, well, all right, let me see what this is all about. Like I'll get in on it, and then then shit hit
And now
the
they're
fan,
mad at you?
and now they
get mad
fucking
at
hate
you?
me. Yeah,
Do
they want me to pay them back, like actual money back, like dollars back on
How
what
much
is
money
locked
did
up.
they?
I think it was like, I mean, it wasn't like a small amount of money. I think it was like a couple grand, but it wasn't like, it wasn't like 10, 15,
So
full
pay
bank.
them that. That's
Yeah,
fine.
yeah. I mean,
they raised you.
Yeah, I know. I'm going to, but I'm doing it in payments over time.
I thought you
So-
made a bunch of money though, just in the bull market. What happened?
I mean, I don't sell, man.
You just okay. So it's just you just all right.
Yeah, I mean, I still have a lot of Bitcoin. I don't like I don't know. The way I view it is like I don't want to like sell my Bitcoin to give them, dollars back and then, have to pay taxes on that money because like that's going to be like capital gains tax. And then two like then I don't know if I'm going to be able to buy that Bitcoin back as quickly and then maybe I miss my opportunity.
I understand. I mean that makes
I mean,
sense.
I'm making money, so and I'm looking for sponsors. So if any sponsors out there want to help me pay my mom back,
yeah. I'll ask my friend from the Financial Times if she knows any fiat fiat people.
Exactly. I have a macro podcast where I don't talk any Bitcoin. So
okay, I want to start listening to that one.
Yeah.
But it all ties in.
Yeah.
It all ties in, and even with
100%. So I mean, it's interesting. Like I talked to all the macro guys, and they all understand that there's a issue with what's going on. But some of them honestly think that the economy is like in a good spot, which is like asinine to me.
What they think we're gonna get the soft landing or something?
Yeah,
bullshit,
they think it's a soft landing. A lot of them think that this is a quote unquote melt up, which I kind of ascribe to that theory where it's like the market is so delusional that they think the Fed is going to pivot and they think that they're going to force the Fed to essentially pivot. So they're going to keep like doing all these like little hope cycles that the like Tesla, for example. Tesla had a huge run up in January.
Yes.
I think it was up like 90% in the month
Yeah.
of January alone, which is insane, especially in this kind of market. And then we're just gonna have then Jerome Powell comes out in these Fed meetings and is basically saying higher for longer, all these other things. We're gonna see a quick shoot down, and then as time goes on, they're gonna forget about what Jerome Powell said. The market's gonna initially react. It's gonna keep going up, and then
Powell speaks,
brings
it down.
Powell speaks, brings it down. And it's kind of like this quote-unquote melt-up where it's essentially just going to be a bunch of little bear market run-ups.
Yeah, dead cat bounces.
Yeah, exactly. Yeah. And then 2024 is going to happen. And then, then shit's going to be really hitting the fan. And the Fed's very reactionary. So they're going to they're going to start lowering interest rates when it's too late. The market's going to crash. And then 2024 is when shit's really going to hit the fan.
You think the market crashes in 2024?
Yeah, I think so.
Or
I
you
mean,
think, or you think it starts to run up because of election season?
yeah, I mean, I guess I've said like a little bit of both of that, huh?
Yeah, right. Because
Yeah.
like, I don't think that they want Trump to come back, or
Oh
I don't
no.
think that they want President Ron DeSantis.
I mean they're afraid of DeSantis. I think they really are. I mean like I think for the average voter, like average Republican, right? I mean the Republican Party's kind of split on Trump. So like, we have
Dude,
that.
that's the vaccine salesman of the year, Brandon.
Yeah, I know. I don't know, man. Like
Watch your tone around Captain Pfizer.
Dude, I am let me get on record. If Trump runs, I'm all for Trump being in office. But like, I have friends in Florida who think that DeSantis should run for president, and like he would be the better option.
I think DeSantis would be a better option. Okay.
Because Trump's too polarizing, essentially.
No, I just think DeSantis is actually better at his job.
I mean, so here's
just by seeing
I don't
him
know
as
if,
the governor of Florida, I think he would just be better at the job.
Have you seen that? I think it was like what's his name? The crazy InfoWars guy. I can't think of his
Alex
name.
Jones?
Yeah, so Alex Jones went on Joe Rogan, I think, and had I think it was Joe Rogan, but I heard basically he said that the theory is that Trump's going to run for president and DeSantis is going to be the VP. But the interesting thing about this election would be that Trump can't rerun. So on the next election in 2028, DeSantis would be able to basically run for re-election, and then the Republican Party could be in power for 12 years if DeSantis wins back-to-back. So that's like the crazy tinfoil hat theory on that. I don't know if it. I mean,
but
take that with a grain of salt.
But also, none of that matters when you're $33 trillion in debt with no way to pay that back.
Yeah, I mean,
and the cultural degradation, everything that's happening as a result of and all the things that we're angry about that we want change. And we think Trump or DeSantis will fix. Like, you cannot fix a $33 trillion problem.
No chance. I mean, like, the deficit has gotten bigger in every single presidency. The government doesn't have like an income problem; they have a spending problem. I mean, they put too much money in bullshit all the time.
Yeah, what do you mean?
I mean, like, it's ridiculous. So
wait, you don't think that the startup that makes vegan cat food for trans kids in Austin ISD is a viable company?
God, no. I mean, it's just like I don't know. I think they sent like I forgot the exact amount, but they sent a bunch of money to like one of these Middle Eastern countries for like gender studies.
Yes,
basically.
I saw that.
Yeah, and
I saw that on the Best Business Show. They had a whole segment about about the infrastructure package.
Yeah, and the crazy thing
none of it had
about
anything to do with Dude, none of it had anything to do with infrastructure.
And you know what what it does too is like that inflates GDP because part of GDP is government spending. So it makes the GDP of the United States look better, which is just fucking insanity. Which I mean,
silly.
it's like it's all just like a clown world. So if you understand like how these statistics are calculated too, you could see that like some of these statistics, like they were good at one point in time, but now like people understand how they're being measured, and so they're just manipulating the shit out of them to make things look better than they are.
It's fucking hilarious though. Like watching the news gives me a whole different perspective now.
Oh yeah, I mean like we were talking about my tweet that I put out a little bit pre-show, but like Vice, had a tweet that it was just like, oh, Trump era bank, Silicon Valley Bank is causing
just like
this
Trump
collapse.
caused the train crash.
Yeah,
yeah,
I mean, it's just like it's ridiculous. Like, how can you? It's 2023. He's been out of office for 3 years.
How many billions
now.
of dollars are we sending to Ukraine? And there was a bad train. There was a bad train track or train line that caused a train to derail, and you can't fix that with all the billions of dollars we're sending to Ukraine. You can't fix the basic you can't actually fix basic infrastructure when we passed all these huge packages.
Yeah,
because it doesn't actually go to fixing infrastructure. That's why
it doesn't. It's ridiculous. I don't know. I mean, it's like
if it went to that, I'd be like, okay, cool. We probably should spend money to fix our infrastructure. How do we know that you're actually going to fix the infrastructure?
Well, I mean, it's the big problem is like with these bills, they send like thousands of pages of bills, and they're like, hey, we're gonna review this and vote on this tomorrow. It's like nobody has time to read all that.
Yeah.
I mean, it's like we have some sleuths on the internet that'll go through and like pull out certain sections or know what to look for, but like the average politician, they're not fucking reading that. They're just voting it one way or the other.
But that's why they want to censor the internet, because it's not so much like the crazy conspiracy tinfoil hat stuff. It's they want to shut down the sleuths.
Well,
they want the sleuths to be shut down because they're making you realize that everything you're being told is not true.
Yeah, well, I mean, like if the Twitter files haven't told you anything, I mean, like the the FBI, the United States government, like all these stuff. I mean, they're publicly traded companies, right? I mean, Elon made Twitter now private, but I mean, at one point in time, as a publicly traded company, if the United States government says we're gonna shut you down and you're run by the SEC, and
they were offering that. Well, Twitter also had financial problems too.
Yeah.
And they were not like a solvent company. That's why when Elon took over, all of a sudden a bunch of losses started accruing. It's because their money was not from users. It was literally they were actually
from the government.
being Twitter was a publicly traded company that was also taxpayer subsidized.
Yeah.
Which is another problem in and of itself.
Yeah, exactly. I mean, our tax dollars just go to so much bullshit. And I mean, it's
but we got to tax the rich.
Yeah. Oh man, dude. And it's like I don't know when they were hiring, or like that thing was coming out that they were gonna hire like 47,000, was it, new IRS agents? Like
87,000.
Or it was 87,000. If you look at where the most amount of like if you look at where the poverty is in the United States and the amount of people who go through audits, basically the map lines up. So it's like they're not going to audit anybody that's, rich, right? Because those rich people can pay somebody to help avoid those audits or find those tax loopholes. Whereas, like, I don't know, somebody who's middle class or low class.
You need a national divorce, dude. Just off that alone. Like, that's why you need the national. Just off of that. You just national divorce.
National divorce?
It's right. It's the only approach, right? Like, get rid of the $33 trillion. You don't owe $33 trillion if that entity doesn't exist anymore.
Yeah.
It's like dissolving the trust. Just dissolve it.
Yeah, I mean, I don't know. Why do we have to pay taxes if they could just print money whenever they want?
Yeah, and that's a whole other debate. But the good news about the IRS agents is that it is taking place over like a 10-year period.
Yeah, but
and so you have time to fix this.
Yeah, 100%.
You do have time to elect better representatives to fix this.
Yeah. But I mean, like, like I said, like these people who are like, it's like tax the rich and all this kind of stuff. But at the same time, like the rich are the people that are providing jobs for the lower and middle class. So I don't know. It's a double-edged sword.
And what's your definition of rich, right? Like, okay, then Bill. All right, so why aren't you going after George Soros and Bill Gates with the same fervor that you go after Elon Musk?
Well, yeah, and then I mean, Elon Musk has paid the most in taxes this year. I think like more like in anybody in history. Yeah. And he's like openly admitted that. And then it's like, all right, anytime you make a $600 transaction now, they want you to report that.
They got rid of that.
They got rid of that.
Well, that's fine. Just do $575.
Yeah. What's $575? Instead of $600, just $575. Yeah. Yeah.
Or just do 6 $100 transactions.
Or $599.99.
Dude, but you know what though? All this is gonna do, it's just creating more of a value proposition for Bitcoin. And and there's also so many ways to avoid taxes too, because you could also wash sale and harvest losses and do all that stuff. And the good thing, even though the Biden administration is kind of trying to come down on the Bitcoin industry and the crypto industry as a whole, you have no power with a split Congress.
Yeah.
You have no power to implement any of that stuff. All it's doing is it's actually going to create a lobbying push to get Biden out of office. And a big reason why Biden got in office is because every single mega corporation just lobbied extensively to get Trump out, and the majority of Trump's donors were actually from small business owners.
Yeah, and it's so interesting too, because like everybody that I know that voted for Biden and was on that side was like, oh, I hate these big corporations. I'm all for like small business. Like these big corporations charge these astronomical margins, XYZ, and then you see these big corporations going for backing Biden. It's like what. Who do you think that people vote for? It's for whoever is like going to benefit them.
Well, you know that that could be another reason why lockdowns were pushed on people so much, because when you have something like a lockdown, you weren't able to go outside and interact with those people to tell them like, hey, bro, do you know this is happening? And then the internet, and then when you look at how the Twitter files operated, content that disagreed with these narratives, whether it was true or not, even if it was true, they censored the visibility of that content. So your friend who has those beliefs still had those beliefs because they didn't know.
It was getting reinforced.
Yeah, they were not able to know otherwise because they weren't exposing people to dissenting opinions.
Yeah. I mean, like I said, it was getting reinforced like on Twitter and everywhere else. And then, you see these like, Joe Rogan, he's like a perfect example. He was having all these doctors come on that said like, this could cause myocarditis, like all these like after effects of the vaccine and everything like that. I mean, like I I did research in college, like human research studies and like engineering. And like in order for me to analyze you walking 10 steps one way and 10 steps the other way, it took me over 6 months to get that study approved to make sure that I wasn't doing anything nefarious, to analyze just walking back and forth.
Yes.
And then to get something injected in your body that shit's passed in 6 months. I mean, it's ridiculous. And I mean, I don't know. There's like the Nuremberg Code. I don't know if you know
I know
anything
about the Nuremberg.
Yeah.
We're Jewish, right? My family.
Oh,
We know
okay. Yeah.
all about that
Yeah.
stuff. You can't inject somebody against their will. That is a Nuremberg violation.
But then, I mean, do you
But
know
they'll
why that
also-
started? Yeah, you know why that started.
Yeah,
then, yeah.
they'll also say that. Well, we're not forcing them. We're not injecting anybody against their will. We're just saying that they can't do certain things.
Yeah,
now.
you just can't work for our company, and you're going to be laid off, and then we're not going to give you any severance package, and you quit on your own volition. So it's.
But we're not forcing you. You just you made that choice.
You just can't feed your family. You can't travel. You can't go see your grandmother.
But everyone needs health care and equity, and our democracy is under. And then these same people are telling you that democracy is under attack if you don't vote for them or if you don't support Ukraine.
Yeah, land of the free.
Good luck. Hey, good luck. Good luck, bro. Good luck.
Yeah.
Good luck. It's gonna come. This is going to come back to these people, and it's gonna come back in a big way. And the biggest, who the biggest losers of this are gonna be?
Who?
Like, young women and LGBTQ and like promiscuous women are gonna be the biggest losers.
Why do you say that?
The abortion stuff. The backlash happened with Roe v. Wade and Dobbs.
Yeah.
No abortions now. You know what? And that would never have even been a thing that could have gone through the Supreme Court.
But I mean,
had these mandates not happened, this abortion stuff would have never passed. This abortion stuff would have never passed. Or like,
well, I mean,
that's my take, right?
Roe v. Wade essentially just like allows states now to make the decision.
Yeah, dude, I don't care about this at all. I'm just making a statement.
No, me neither. I
really just don't care. Like,
but do you know how many people think that it's like such a big deal and it essentially is abolishing and like it's
bro? That's what I'm
ridiculous.
saying though. We talk about it's like people are going to the wrong protests.
Yeah,
they are going to the wrong protests because
they're making it look like, all right, I'm going to vote Democratic. Even though the economy and everything's burning around me, I'm going to go vote Democrat because, this Roe v. Wade thing. Like,
and
it's
to
my
be
body,
honest,
my
why
choice.
do people? Okay, but let's also look back on this for a minute. Why do people get abortions?
Yeah, because of like, I don't know, bad situations.
No, I'll tell you why people get abortions. I'll tell you why. It's really simple. Because having a kid is expensive.
Yeah.
Because money, right? Because of money and because of how much harder and harder it is to take care of your kids. And so when you have bad money,
yeah.
And when you're printing your way into oblivion in a red hot inflationary environment, and then you're tightening rates super fast and you're causing regional banks to collapse, you're actually putting policies in place that are making it that much harder for people to even have children. So it's going to like incentivize the need or want to even have something like an abortion get done to you. This is a generalization, but this is how I feel, right? Whereas like, when you have a better economy and more people have an opportunity to participate and benefit from that economy, you're more likely to want to have children.
Well, I know I agree with that 100%.
That's kind of where
I was talking to this on my State of Bitcoin podcast with Alex Fetsky too, because you're exactly right with that, right? I mean, now you need to have a 2-income household where 20, 30 years ago you could maybe have like one parent stay home with the kids and other things like that. Housing was more affordable back then. Now like essentially we have a point where we're kind of making it where you need 2 incomes to survive and whatever. So, somebody can't be home to raise the kids. You need to save money longer and be in a better financial position in order to have kids. So people are having, kids later in life. Men and women are focusing more on their careers. I saw a video the other day that a girl was like, why would you ever date a guy that's in between the ages of 23 and 28 or 27 or something like that? Because if he has time for you now, that means he's not putting in his value into his career and kind of working towards that. And so,
okay, cool. Then you have that mentality, and then like, if you're 23 to 27 with that mindset, guess what? You're just gonna run through a fucking bunch of women.
Yeah.
And guess what? If you're a girl who's between that age, you're just gonna come out. You're gonna be 33 with a super high body count, with all types of fucking baggage from how you were mistreated by men, and now you're gonna bring that onto your future partner. You're gonna be that much more likely to get a divorce. You're gonna be that much less likely to have children. You're gonna be that much less likely to raise these kids in a happy, loving home where they can actually grow to be better than you. Like, this is literally how, dude.
And it's all rooting back
listen,
to like
fiat
inflation.
money printing and currency debasement is literally how cultures and societies completely degenerate, and that's a historical fact.
Oh, 100%. And I mean, that's like the great American empire. I mean, like a lot of people, in schools, like growing up, like it wasn't, I felt like when I was in elementary school and other things like that, it was like cool to think that America was the best country in the world. Now, I bet if you go poll a lot of these kids around the country, they'll tell you they don't think America's the greatest country in the world. They think there's so many issues with everything, that every other country is so much better than the United States, where if you like look around, it's still like the land of opportunity.
Bro, go to Europe during you should go to Europe during COVID and try to go to the park by yourself and see how you feel about America.
Or even Canada.
Go to
Like,
Europe
just
and go to the
north.
park by yourself. People were getting arrested and beaten by police for going to the park by themselves outside during COVID.
Yeah.
When I saw those videos, I started to appreciate so much about why I lived in America.
Yeah, I mean it's absolutely insane. I don't know. I don't understand it. I mean, my parents are small business owners and all that, so I mean, like, I've always kind of seen them and how hard they work and where they've been able to get because of that. And I don't know. I feel like it's just all being taken away, and they're essentially these policies and everything like that. The mindset around being a small business owner or doing all that stuff is just, I don't know. It's the degradation of, the great American empire. And what people don't realize is a lot of these things, like, when COVID shutdowns happen, minimum wage goes higher, taxes increase. That just makes the barrier to entry to these small businesses so much higher. And in America, over 50% of the jobs are in small businesses. Yeah. So, I mean, it's like, we're kind of taking it away. It's not only at a banking level, right, where we're seeing like the big banks potentially swallow up the regional banks. We're seeing like these big enterprises like
swallow up the small businesses. Yeah.
I mean, it's like, all right, we had COVID shut down your local favorite pizza joint at the corner, and now it's a Domino's.
They try to do it to us with Uber.
Yeah.
And with the Lime scooters.
Yeah.
And that is definitely that's another thing. Luckily, we have this niche service, and there's enough for everybody. But don't think that they're not trying to do the same thing to us.
Yeah. And I mean, especially like Austin's kind of quirky, where like people, I think, will always kind of like the pedicabs and like that aspect of it.
Especially when you're doing something and you're using your pedicab to make yourself known.
Yeah.
Then it becomes that much harder for somebody, because when people associate pedicabs, I want people to associate pedicabs with, like, we're small business owners, we're family men, we're going to college, we're musicians, we're content makers, we are fighting for your freedoms. Like, we are doing this. Like, if someone listens to this podcast, they're going to be like, bro, like, I want to take a pedicab because I want to support this.
Yeah.
Does that, you know what I mean?
Yeah, exactly. And I mean, like, yeah, you guys are working hard. I mean, Austin is not flat. So,
well, we have motors now, so we're not working as hard.
Yeah, but still,
our job is Bitcoin, though. Our job is like actual proof of work.
Yeah, no, 100%. And that's where I think it's being lost, is like a lot of these, tech jobs. I mean, I don't know if you saw the TikToks kind of going around, like people at the Meta headquarters and other things like that, where they were just, going, or I think I saw them on Twitter too, because I don't even have a TikTok. But I mean, they would be like, hey, I was feeling a little tired, so I showed into work at 9:30. Then I grabbed coffee at our local facility on campus. And then, I had one meeting at 10:30. Then we went to go grab lunch. And then, it's like, all right, out of all this, you talked about working for like literally like 3 hours of that 8-hour workday. So, I mean, it's like, I don't know.
Brandon, how do you think the home builder stocks are going to do?
Home builders?
Let's talk about housing. This is a great way to segue into housing, because we've been doing this for like an hour. Like, I want to talk about housing.
Okay. So, yeah, I mean, initially at the beginning of the year, I wrote a newsletter on my 3 predictions for the overall macro environment for the year, and one of those predictions was on housing. So I think, areas like Austin, Tampa, where I'm at, Miami, Nashville, like the big booming cities, they saw a quick run up. So I think, with the raising interest rates, it makes banks harder to lend on that. And so, that mortgage payment for a $400,000 house is now like double the amount that it was like 2 years ago. And so I think that because of that, a lot of people are going to wait to buy housing.
Or they're going to want to pay less money because
or they're going to want to either buy a cheaper house. So, what I think is that housing in these areas are going to stagnate, where in like less desirable areas to live, where people have kind of been fleeing out of, you think New York, California, Boston, like those places, that housing is going to get crushed there. And I think, in places like Austin, Nashville, Tampa, I think rent's going to go up. I mean, we're seeing rent kind of stabilize a little bit now in those places, like go down slightly. But I don't think, I mean, it's not going to go down much because, like, people are not buying houses anymore. So when they don't buy houses, what do? They're going to put it off for another year or two, and they're going to go, hey, I'll go buy this or go rent this nicer apartment. And so that makes apartments, more desirable, and that competition raises the price up. So, I mean, we're seeing kind of housing, like I said, like stagnate in those areas, kind of fall. We're seeing houses stay on the markets longer. But I think, people kind of in these areas that are like more desirable, just kind of, investors are going to come in and start to swoop those things up because they've seen them skyrocket already. They'll come in, fix them up. And then when people actually want to go buy houses and interest rates are a lot lower,
then it'll really go
then
up.
It's going to skyrocket.
Like, I think in 2025, the home that you bought in 2022 will be a lot of money.
Yeah, I mean, I kind of agree with that fact. So, I mean, I got lucky. Like, I bought a duplex in Tampa in September 2020. So I live in part of it, and I Airbnb the other part.
All
Airbnb is not slowing down or anything like that in Tampa. People kind of have that theory where people aren't going to be traveling as much. But I think, like, in the desirable places,
no, they're going to travel, and they don't care because they'll just use creditor mom and dad's money and stuff. Like, there's still a lot of boomer money that needs to flow through the system.
Yeah, and I mean, like, we still
and there's
have
a lot of boomer parents that did such a terrible job of raising their kids.
They're just
that they will just subsidize their kids for the till they're dead anyway. So they're still going to be like Airbnb and hospitality is not going anywhere. I don't think.
Yeah, I mean, the one problem is I think like people who kind of just got into Airbnb who either don't have like don't have any kind of, I guess, sense in when it comes to hospitality, don't really care that we're just in it for the money. As soon as they see some sort of sign of struggle, they're probably going to sell or get out of it. Or maybe we saw some people, like newer investors, over leverage and get too many loans out that they really couldn't afford
because they think that they're going to make the money back right off the bat.
Yeah.
So, a lot of people still are trying to tell me that I should just take out a loan and buy a rental property for someone. And I'm like, no. Not right now. Not in this environment. The last thing I ever want to do is be insolvent or worried about that.
Yeah, so
not doing that. Terrible idea.
Yeah, I'm actually looking into potentially buying another home like later this year because what I think is, some of these houses are going to be on the market for a little bit longer. So you just got to find one of those people that are maybe like potentially needing to get out. So like you're just gonna make like disrespectful offers.
Yeah. Oh, I like that. I like that actually. But disrespectful. That's great.
Well, I mean,
somebody's gonna take it. No, that's smart.
I mean, like here's an example, right? So like
disrespectful. I love that.
on my street in Tampa.
Yeah.
I bought my house 2 years ago in September 2020 for $365.
Yeah.
A house down the street from me got fixed up, and like I said, mine's a duplex, so it's like investor friendly. A single family home sold for $485 that got like all brand new, redone, everything, like basically full remodel. There's another house like a couple doors down from me that still needs a little bit work. It went on the market for $480 like in November. Still hasn't sold. They dropped it to $400. And I'm thinking, if it's me and I'm going to start like making offers on homes, if that house is still on the market come summertime, I'm going to offer like $300. Like I'm not
offer $250.
Yeah, or maybe something like that. Like it's just like I'm not here to try to, make friends in that aspect. Like I'm going to come in and I'm going to try to find a deal that I think that, it's somebody's like either desperate to
foreclosures.
Sell. Yeah. Or something like that.
Be that guy. Find the foreclosed homes and buy the house that's getting foreclosed on.
I mean, it's like when people are running scared, right? I mean, this is like a famous Warren Buffett quote. When everybody's fearful, that's when you got to be greedy, right?
Yeah.
So, I mean, like, people might see this and think I'm a fucking scumbag or something like that for going in and offering that stuff.
Well,
but
we were talking about regional bank ETFs earlier. Yeah.
Yeah. I mean, it's like, at the end of the day, it's like, all right, if this person has had this house on the market for like a year, they're still paying the mortgage on it, right? I mean, so they're either going to, want to get rid of it or, and probably sell it at a lot less than that they originally thought, and maybe they're just like sick of it at some point.
Okay.
And I mean, that house probably still needs a little bit of work, like I said.
So hold up. All right. We talked about the high market areas, and we talked about the places that nobody wants to be in. But what about middle America? What about like Ohio? What about the areas? Yeah. What about the areas where that train derailment occurred?
Yeah, I mean, that's going to be hurt like really badly, I think. I mean, people have kind of been running away from Ohio and like states like that. I mean, you got to think like, where are these jobs at, right? So, I mean, we're having people kind of go like revert back a little bit towards the office. So I think, some of those places, like they're going to be more jobs that are popping up. I mean, you see it here in Austin all the time, right? Companies are kind of flocking here, and that's where the jobs are going to be. So if you're remote and you have your family in Ohio, why would you live there anymore? I mean, like, or if you have a job or something like that and they're train derailment, the local economy in these places is going to be actually absolutely crushed.
Yeah, because you can't drink the water, you can't eat the food, you can't do anything. No bailouts for any of those people.
No
bailouts.
They're not gonna. Yeah, they're not.
No
gonna,
bailouts, nothing. But like the VC that makes vegan cat food for the transgender kids in Austin ISD, they're gonna get $100 million back.
I love how you're just trashing Austin ISD because I was a Leander ISD kid. So
Leander ISD, honestly, it's even worse, dude. The
wokeism,
the level of wokeism that's happening in those schools.
Oh yeah,
is actually, dude. It's actually even worse than it is in Austin.
Yeah.
What year did you graduate?
2012.
High school?
Yeah.
That's funny. I moved here in 2013, and I started working in an after-school program. I wanted to be a school teacher, so I was subbing, not in Leander, but in Austin ISD.
Yeah.
And it's crazy because some of the kids. I worked at this place called the Abacus School of Austin.
Okay.
Do you know what that place is?
Yeah. Well, isn't it like
right on Avery Ranch?
Okay.
Right between Austin and Leander. Okay.
Yeah.
Or between Austin and Cedar Park or something. I don't know, but yeah, I took that rail right there, and Leander was a stop. It was Lakeland, and Leander was the next stop, right?
Okay.
But yeah, a lot of those kids that were in fifth grade are now in college now. Crazy, dude.
Yeah, the crazy part about all of it is they teach the wokeism and all that kind of stuff, the inclusion stuff, and they cater to all these kids in schools, just period. And I mean that's an issue with the public school system.
A lot of those 10-year-old kids, I wouldn't be surprised if they got pronouns now on their Facebook bio.
Well, I mean
and they were normal kids that just wanted to play sports when I was there. So I'm what were they? I wonder what they got brainwashed into learning about these next 8 years while I was.
I mean, so my family has roots in Chicago, so I went on a golf trip with one of my dad's friends, and we went to some place, and he brought his kid who just graduated college, and he's like, yeah, every time we do the introductions at the beginning of class, you have to say, hi, my name is Brandon, he, him.
In college?
No, in high school. In high school in Chicago, they're doing this stuff where you have to say your pronouns every single day. So it's being thrown in these kids' face while their brains are developing. What is this kid going to know any better? I mean, luckily, this kid had a parent who's all right, dude, this is ridiculous. You're not bringing that shit home. But also,
you're not going to school here anymore.
Yeah.
Get your GED, take your equivalency exam. You're done. You're not going to school here.
Yeah. And I mean, I don't know. I would if you go through LinkedIn right now, I don't know. I actually saw an article that was on CNBC that said people who have the they them pronouns are less likely to get hired. And so they're saying, well, companies are, not including people or whatever. But it's in reality, they just know that employee is going to be more of a headache than, anybody else.
Yeah,
so, I mean, it's people are starting to wake up to that fact.
But then that woke mob is going to go start attacking those companies, and then if you have stuff like Operation Choke Point, 2.0, then now the federal government could start stepping in and saying, hey, well, now we're going to audit. Now we're going to pressure banks not to lend those companies money.
Yeah.
Yeah, and if a bank does lend those companies money, now we're going to give you audits.
Yeah.
Left and right, and we're going to make your life a hassle. So you're going to see a lot. You could see a lot of that bullshit start happening.
Yeah.
And then all of a sudden now the performance of your company goes down, and let's say you're doing something serious like operating mass transit.
Yeah.
Oh, look, another train derailment. Oh, man, now the water isn't clean. Oh, no, now you can't grow your food. Guess you got to go live in the 15-minute city.
Yeah.
What are you going to do? I mean, this is super conspiratorial, but I could see this, playing out, right?
No, I mean, I don't think it's conspiratorial at all. I mean, it's you got to, you got to go live in these big, metropolis cities where, majority of them are, have to be woke or,
it's not even about being woke. It's about being monitored.
Yeah.
It's about
that's fair, 100%.
It's using fake progressive, fake woke logic, right, to create a system where everybody has to be centralized and monitored. And this wokeism and the inclusion and the diversity and all this fake progressivism, it's a way to choke off people that disagree. It's a way to choke off competition.
Yeah.
From mega banks and mega big tech companies and these entities that are colluding openly with governments and NGOs to create a very, very centralized global way of doing things. That's what the stuff is for. It's got nothing to do with inclusion. It's got nothing to do with diversity. The only way to fight back against this is to either wake enough people up to realize that and just laugh at it, or also to just choke point them in the opposite direction. Like, okay,
Yeah.
well, fine. If you're gonna do this to us, then we can do. Then in Texas, we're not gonna like if you're giving people hormone blockers, or if you're getting we're not gonna lend. We won't lend money to companies that pay for your abortions. We won't lend money to companies that pay for you to transition.
Yeah.
You know what I mean? We'll investigate your kid for being trans. Like we'll go the opposite way now because you're doing this. Like so that I mean that's I think unfortunately one of the other things that you're gonna have to start doing.
Yeah.
Which sucks because I like everybody, but I can see that being another thing that winds up happening, and that's why I said like, LGBTQ kids and like loose women are going to be the ones who really get hurt from this.
Yeah,
you know what I
I
mean?
agree,
Like as a
because
casualty,
like everybody's
like,
just everybody like the people who like maybe actually want to be trans or to go through that stuff like maybe 10 years ago or whatever.
Nobody
like,
cares.
It's like nobody cares about them anymore. I mean, it's more just like trying to be normal.
Now you're going to be another pawn in this game because of this.
Oh, they're 100%.
And you never had to even play. This never even needed to happen.
Yeah.
Right? You literally could have just like not done Operation Choke Point. You literally could have just let businesses and companies do what they were doing and let individuals figure out what's best.
Yeah.
You literally could have just done that, and this would never even be a problem.
Yeah, or let the free and open market like figure it out. But I mean, that's a problem. Like when there's things like this that happen, like with Silicon Valley Bank and other things, it just calls for politicians and other things to say like, hey, we need more regulation. We need to be there to help you out more. And that's what
Cool. And then who's the regulation going to benefit the big four banks? That's what's going to happen.
Exactly. Exactly.
But we all know this. It is what it is. It's not my problem because I'm, there's a really easy solution. It's use better money.
Yeah, 100%.
Not financial advice. Use better money. But as I was saying,
if you take his pedicab, pay him in Bitcoin.
Please, I prefer that, actually. I give discounts if you pay me in Bitcoin. It's very scary, though. A lot of people, even during South by, still have no idea how to use it or what it's for or how to pay it. Like, there was Bitcoin, bro. I got Venmo, but they're making like $200,000 a year working for some tech company. They are the people in those videos. And, when the dominoes break, it's going to be scary what happens.
Well, yeah.
And, but what I was saying with the home building stuff.
Yeah.
Imagine if D.R. Horton built a bunch of houses throughout the whole Midwest. What's gonna happen?
Yeah.
Like, nobody's filling those houses. Nobody's renting those houses for what they paid for it. Like, that's definitely. You don't think that could like affect earnings and affect like valuations and affect like share prices if you're building homes right next to that, like within the neighboring states or near the same body of water of what happened in East Palestine?
Yeah. I mean, you're 100% like nailing it on the head. Like, I mean, we were talking about this a little bit pre-show, like East Austin, where we're at right now. It's like all these nice ass apartments buildings that you can tell have gone up in the past like 2-3 years. And before this was like the hood when I was growing up. Like, you don't want to come to this side of the bridge, in Austin. And now it's like kind of like, I don't know, the gentrified kind of like hipster-y place to live.
But imagine all those displaced kids. Imagine all those displaced families. Imagine if like they were taught financial education in high school. Imagine if that was prioritized. Imagine how much less those kids would have been forced to leave.
Well, 100%.
Right? They would have been benefited. They would have been the ones who started opening the businesses. They would have been the ones who the growth would have happened on their terms. They would have been the first benefactor of it.
Well, I mean, that's the problem with the centralized, public school system is that they're trying to make good employees. They're not trying to make good employers.
It's created by a lot of your government schools are very much Rockefeller run and Rockefeller oriented, which is another fun fact.
By tax dollars, right?
Your tax dollars pay for the drag queen to read to the 5-year-old.
Yeah,
your tax dollars are paying for the puberty blockers.
Yeah, it's fucked up. It's honestly, it's so fucked up. Like, I mean, you just follow the incentives with all this stuff, and that's where you can really figure it out.
Anyway, some magical internet money with a fixed supply that's based on energy production fixes a lot of this.
Oh, 1,000%.
That's it. All right. Brandon, how do we get in touch with you?
So best way, Green Candle on Twitter at Green Candle IT. Green Candle was taken, so I had to add something on the end. Then I have a link tree in there with my YouTube where you can find my podcast and all that stuff. So, Macro Insights, State of Bitcoin podcast, wherever you get podcasts.
Yeah, Brandon, thank you so much for coming on. This is a great way to start the day, dude.
Yeah, man, I appreciate you having me.
Yes, sir. I'm excited. All right.